Today, Celsius files for Chapter 11 bankruptcy. Disney picks Polygon for its accelerator program. And we talk to Valour's Russell Starr about what higher interest rates mean for your crypto wallet. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Prices for major digital currencies are rising today. By noon Eastern, Bitcoin crossed above $20,000, Ether jumped to $1,100, and Cardano traded at 43 cents. Now, a lot of investors are worried about the global economy and think we're headed for a recession. And over at Bernstein, they say that crypto prices are closely tied to Fed policy. As the Fed raises interest rates, which they're doing right now to try and fend off high inflation, digital asset prices fall. Then when the Fed eventually pivots to lowering rates, crypto prices should rise. Bernstein also says that this crypto winter is an order of magnitude worse than the one in 2018. Back then, the $800 billion market cap was driven by the promise of new crypto products and future users. But now crypto has those users, but it's bogged down by debt and bad actors. Bernstein says that once the dust settles, they expect better revenue and stronger systems to prevent risk. All right, let's talk about the top stories. First up, embattled crypto lender Celsius has filed for bankruptcy. In a statement released on Wednesday, Celsius said it would look to stabilize its business by restructuring in a way that, quote, maximizes value for all stakeholders. The company made headlines a month ago when it halted user withdrawals, citing extreme market conditions after crypto prices plummeted. Celsius's bankruptcy follows the likes of Voyager Digital, which filed for Chapter 11 bankruptcy protection last week. Next, Disney's just picked Polygon to join its accelerator program. The blockchain platform was one of 6 projects picked to join the mentorship program, which this year focused on developing augmented reality, NFTs, and AI projects. 2 other Web3 companies, FlickPlay and Lockerverse, were selected for the program as well. Polygon's Matic token soared more than 20% after the announcement. Finally, GameStop's NFT marketplace has been open for 2 days and it's already outperforming Coinbase. GameStop's NFT platform saw a little more than $3.5 million in transactions for its top 50 NFTs. Compare that to Coinbase, which has only seen about $3 million in trading volume since its launch back in May, and that's according to Dune Analytics. GameStop's marketplace will eventually focus on gaming NFTs, which they hope will be even more valuable. Okay, for our main story of the day, we're turning our attention back to the markets. Crypto World's Mackenzie Sigallo spoke to Russell Starr of Valour about what rampant inflation and high interest rates could mean for crypto in the next few months.
So crypto is actually getting a bit of a price bounce today. What's happening?
Look, there's a myriad of theories out there as to what has happened, but the reality is that most of the contagion was associated, in my opinion, with Three Arrows Capital. And so you're actually seeing, sort of a bounce after the cleanse. And the cleanse was a lot of people front-running positions that they knew were going to be coming out of Three Arrows Capital. Obviously, you've seen the demise of Celsius, you've seen the demise of Voyager, and obviously the instinct of traders is to take advantage of that. And now you're actually seeing what I consider to be a meaningful bounce and likely a regression back to the 25 to 30,000 level.
So a lot of the experts I've spoken with have said that this domino effect isn't over yet. So do you think that that's already been priced in, or are there other black swan events that we should be looking out for?
If Three Arrows Capital or Celsius had all of their loans on the chain, everybody would have known that they were over-levered. So the reality is that you can look at the negative side here, and that is that once again you had another long-term capital, you had another Lehman, you had another basically over-levered, over-concentrated fund that somehow managed to skirt any of the regulatory sort of oversight that you would traditionally see in the capital markets. And with the demise of that fund came, as you mentioned, the black swan events of basically Bitcoin trading down. I think it was the most it's ever traded down on a month-over-month basis. I really don't see too much more coming out of those events, especially when you look at how Bitcoin has reacted. It sure felt like when it tested kind of 17.8 that it was going to basically test that dark horse theory of maybe 8,000, but you've actually seen meaningful buying. And so now you're seeing, in my opinion, resume natural buying back into If you saw what JP Morgan had put out, I think it was a week or two, maybe 3 weeks ago, sort of a $38,000 realistic price for Bitcoin.
So we got new CPI data out yesterday that showed that inflation, it's still sky high, even though some people had said that it had peaked. How vulnerable is crypto to a period of extended high inflation?
People need to understand that everything you're looking at is delayed. So the CPI numbers that we see now, whatever the Fed does today isn't going to have an impact for 3 to 6 months. And my worry is, and there's a ton of economic evidence on this, contractionary economic policy actually has a magnifying effect. And I think you're looking at a course that's being taken by the Fed that's going to put the US into a recession, maybe even a depression, as they try to visually deal with inflation. And that's by these aggressive rate hikes. But again, they take 3 to 6 months to actually take effect. And if you look at oil prices, if you look at housing, if you look at the employment situation in the US, none of those paint a rosy picture right now. And so the big worry I have is coming into an election year, you're looking at a recession in the US. And quite frankly, you're asking about where we see crypto going. If you're your typical trader, analyst, portfolio manager, you're not looking at what's happening now. You're looking 3, 6, 9 months out. And I'd be willing to bet, and I do this because I bet with my own portfolio, that the next set of events that you see in the US, probably in the 6 to 9 month territory, is back into a quantitative easing phase as they try to actually ease monetary policy to get the US out of a recession. And so the Fed, to me, has basically been chasing its tail.
So on that point about the Fed's influence, we have heard some rumblings that the Fed could be hiking rates even faster in response to that inflation data. Bernstein just put out a report saying that, crypto is still very much tethered to Fed policy. So should we expect prices in the crypto market to remain under pressure until the Fed pivots?
If I had my crystal ball and I rubbed it, I would have thought that after this most recent inflation data that you would have seen crypto really on its knees right now. But really what you saw is a very small sell-off relative to what we've seen historically, and then a really nice rebound in crypto prices. And so, back to my original point, and again, this is with more of a TradFi perspective, not that crypto purist perspective. I think that Bitcoin's done exactly what it was supposed to do. I think that DeFi literally has survived incredibly well and shown its strength, and why, in my opinion, the SEC should be far more favorably inclined to letting this new ecosystem grow unencumbered. And probably, and again, these are famous last words. You and I can have a conversation in another month or two. But I think we've probably seen the weakest point of Bitcoin here in at least the near term. And again, I think you're looking at a mean regression after a very, 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 what I would call nothing short of destructive phase in Bitcoin, from that 69,000 high down to that 17.8. And now really finding its footing again in sort of that 18 to 21,000.
Now, you've already said that you don't anticipate that any other major crypto companies will fail in the same way that we've seen players like Celsius and Voyager fold in recent weeks. But has the lending corner of the crypto market fundamentally changed? I mean, I have to imagine that we're approaching the end of easy money in the DeFi ecosystem.
I don't think so. You look at other protocols like Aave, they've done very, very well during this phase. Again, the way you can always look at these situations as a glass half full or a glass half empty. And you're going to have a lot of the naysayers who are going to go out and say, look, crypto's a flash in the pan. I mean, but what really has happened is that Web 3.0 and specifically crypto and DeFi have shown their strength. They were resilient. They performed exactly the way they were supposed to perform.
Okay, with that, you are caught up for today. Crypto World, though, is back tomorrow, and we'll see you then.